What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the indices, break down what's going on with the overall market, some very important things that Warren Buffett himself just said, and also what's happening with earnings going forward and how it may affect the markets. I'm also going to break down why I think it's very likely that the market has a little bit more room to pump, but this will be the final pump before we start to see more downside either later on this week or going into next week. I'm going to break down exactly why I believe that. I'm also going to break down the charts as well and some very important information about other things affecting the markets. But before I break anything down about all of this information, before I talk about Warren Buffett, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000. And the best part is any can be a free Tesla share. The offer ends in just 1 week. Check it out before they run out. With that out of the way, let's get on with the video. Looking at SPY, in my previous video, or at least my video from Thursday, I told you guys we'd likely see a pump on Friday. We got a really nice pump thanks to market makers squeezing the shorts because of the excessive amount of put premiums that were out there relative to the calls. Now, with that happening, right, with all those put expirations and the market squeezing that hard, we are seeing a weakening MACD as of right now. The market did start to weaken as time went on, and it's very likely that the market might end up just cooling off a little bit before we do make another big move. However, I want to note that predicting this on a daily basis is a little trickier than before because I do think the market needs to cool off its RSI first. Same thing with the QQQ, especially. We need to cool off a bit first before we start to see any more pumping. But Warren Buffett did give us a catalyst to help the market pump more. And let me break down exactly why that is. Now, to start us off, with the options chain, there's not a whole lot going on. We actually have a very low max pain for the next 2 days compared to where it was like 2 days ago or even before that. 408 is max pain for tomorrow. 409 is max pain for Tuesday. There aren't too many puts expiring, so the market makers could technically afford downside. I'm not saying it's guaranteed. I'm just saying they could afford it, right? It won't. They don't really care too much from that point. It's not going to be too impactful for them. There are very few options expiring compared to the other days. So that's very important to note. Then on top of that, remember that for Monday, we have PayPal earnings, we have Airbnb, Nikola, Rivian, Roblox, Walt Disney for Wednesday, and then Unity as well with Wendy's. So some very big ones over the next couple of trading days. We also have like Robinhood and a couple of other ones. But the biggest ones to watch for earnings are going to be between Monday and Wednesday. Specifically, Walt Disney is going to be pretty huge alongside PayPal. So make sure we watch these carefully. This could actually have an effect on the tech sector and the NASDAQ. And now, as far as the data goes, not too much is coming out. We just have some inventory data coming out for Monday. For Tuesday, we have some crude oil data and just a couple of other things. Nothing too massive, but Wednesday is when the big data is coming out. We have CPI, core CPI, and lots of crude oil data that's going to be super, super important. CPI itself is going to shake the whole market. If it's as expected or higher, we could see a huge rug pull, so be ready for that, be prepared for that. If this thing is lower than expected, then maybe the market has more room to go. My best estimate based on where the market happens to be as the market's pumping this close to the big date would be we might see this lead us to more downside in the future or very, very soon. We also saw some concerns involving the banking situation just a couple of days ago. So if that does come back over the next few weeks, that could also negatively affect the markets. And that's why I still believe the markets are likely going to pump more, but this could be the final pump before more downside very, very soon. Now, let's talk about Warren Buffett and also the latest earnings for Berkshire Hathaway. This was actually a very strong report from them. Their operating earnings increased 12% in the first quarter. They are hoarding more cash, more than $130 billion worth, and they're once again doing very, very well. You can see their operating earnings are up to about $8 billion. They're up 12.6% from 7.16 billion a year ago. Insurance investment income also jumped like crazy, 68%. Profit from insurance underwriting came up to about $911 million. That is up from a year ago. So we're seeing very, very big wins from the insurance sector and also from Berkshire Hathaway. This is some very bullish news. And then Warren Buffett also made some very important claims. He did knock down any speculation about them taking full control of Occidental. So, not what a lot of investors wanted, but besides that, most of what was reported was quite good. He did also justify the act of hoarding more cash during times like this. That could be, him foreshadowing something very, very important for the future. So be very, very ready. And then finally, he did say something very bullish for Aapl. He said Aapl is Berkshire's number one stock from their portfolio. So that's a very, very bullish news for Aapl. He said that they're a very strong company. It's different than the other businesses that they own. It happens to be a better business. That's what Warren Buffett himself said. And they have a 1 billion stake in Aapl, and they did actually boost it big time going forward. So they did actually get a lot of equity on those positions. He also praised Tim Cook. Once again, bullish news for Aapl. So very, very good stuff from Warren Buffett. Now let's break down what's going on with the charts. So the market pumped pretty hard over the last couple of trading days. Since Thursday, yes, it was a little bit down, but it bounced from the after hours, started pumping, it gapped up, and it just kept going, approaching the big day on Friday. The question is, how is the market going to move from here? Are we going to pump even more? Because technically on the 4-hour time frame, the market is still very strong. And it looks to me like we could be forming a cup and handle like formation, maybe even inverse head and shoulders, trying to get a pump up. SPY also has an unfilled gap in the 415 area, so I believe we're likely going to fill that over the next couple of trading days. Before we fill the gap, though, looking at the weakening momentum, it's very likely that the market might cool off just a little bit, maybe gap down, and we might see SPY retest 409 to 410 first. And as long as it holds those levels, as long as it doesn't crash too hard, it's likely going to come down a bit and then try to bounce. And we might see this thing try to make its way back up to 415 a little bit later. And what I'm trying to tell you is, yes, we cool off a little bit, then we pump harder to the upside, and then the pump could be the final big pump before more downside later on. Hopefully that's simple. I'm not going to try to not make this too complicated. We're likely going to see us initially cool off, push up pretty hard later on, maybe by either as we get closer to close on Monday, if not by Tuesday. And then we're likely going to see the market reverse later on during this week, if not by next week. And we're going to see a lot of downside. All right. So I'm anticipating a big move up eventually, then more downside coming later on, going into like that later part of this week if CPI is hot, or next week because of some negative catalysts. Why do I believe that? Because of how overextended the RSI is. It could be in the process of forming a potential negative divergence on the RSI. We're seeing signs of it, right? We're seeing lots of signs of it, but we don't have enough confirmation yet. There's also this possible inverse head and shoulders that could be forming, or like a cup and handle. But either way, I still see this leading to more upside. Temporarily, for the super short term, yes, more upside could come. For the medium term, I am seeing downside for the markets. That's my view. For Tesla, I think it's going to follow SPY and the QQQ in this. It is hitting resistance, so it might cool off a little bit. 168 could get retested, then it might just try to continue pushing. Going into the later days, I expect Tesla to try to fight back to get above 170. If it breaks that, which I think it most likely will, as the market pumps, we might see Tesla hit 174.5. If it breaks that, it's going to try to fill the gap up to 178. So once again, there's a lot of momentum for Tesla. Got a nice breakout, and I think it's going to maintain some of that. It's going to try to keep going forward. So Tesla looks nice. Looking at the RSI, I'm not really seeing anything too bad. We are weakening on momentum for it, so it needs to cool off just a little bit. The RSI is at 78 especially, so it needs to cool off. We need to see Tesla pull back just a little bit and try to bounce and make its way back to 170, if not higher, over the next couple of trading days. And then, like I said before, after CPI, going into the next few weeks, after Tesla pumps, we're going to see this thing come right back down over time. I know it's unfortunate, but I am seeing lots of signals of that developing on the broader market, and that is going to affect Tesla, as the market's almost running in a very similar algorithm right now. For Coinbase, this thing is losing momentum too. It needs to cool off on the RSI just a little bit. Might retest 50. I'm thinking it's 56 to about 55 right here. Then it's going to try to bounce after that, get one more big push up well above 60 before it makes another final top Okay, so that's what I'm seeing. As I said before, I'm going to be implying to you guys that downside will come for the medium term, but I'm just going to talk about the shorter term from here. For the short term, I do think NEO is going to cool off just like the market. It's already starting to cool off. We got a crossover on the PPO. It's going to likely come down to about 7.9 or so, maybe retest the 50 EMA. It typically does that and tries to get a bounce. That's what it tends to do a lot. This has acted as like support. You can see right here, it came just below it and pushed up. We might see something similar with the retest of like 7.9 or so, then a bounce on NEO and another attempt to get back above 8.3 before this thing forms the final top and we start to see the market downtrend for the medium term. For the HYG, this is known as the smart money indicator. It's also agreeing with this. We saw a little bit more buying, but from the back end, a lot of them have also been selling, right? There's been a lot of sellers overall. If you look at the trend, it's been just downtrending, which tells us that eventually there's likely downside coming to the bigger markets, right? So yes, they bought up just temporarily, but there will be more downside coming soon. When? After the market pumps, there's going to be a big drop, maybe by like mid-May, going into as we approach June. I am anticipating downside. This is what the HYG was telling me. Microsoft holding up nicely, reached our target. I believe Microsoft is going to cool off on the RSI a bit, maybe retest the 50, come down to 307, bounce off that, get one more pump. If it breaks, 312 is going to hit 315 maybe, and then it's going to cool off later on. For QQQ, we're going to see this thing. It needs to cool off a bit. It's quite overextended, so it needs to cool off. It may make its way down to about like 319 to 320, and then try to bounce off of that. So it comes down first, gets a bounce later on, either by the near the end of the day on Monday, if not Tuesday, make its way back to 324.5, if not higher. And then we're going to likely see downside after that. The VIX is telling us the market is likely going to see some downside in the future. Uh, what's interesting is the VIX is on this downtrend. It's likely going to come down to fill this gap. Before it fills the gap, it might try to bounce just a little bit before it ends up failing. So that's what I'm seeing. That's why I think the market's likely going to cool off just a little bit. And then I think the VIX will fail maybe around the 50. So maybe it comes just short of 18 and then it gets a rug pull. The VIX comes all the way down to 16 to 15 or so. That's where it's going to bottom. Maybe it forms a bullish divergence and then it bounces later. So what does this mean in English? Basically, the VIX is telling us the market, the S&P 500, the collective market, the QQQ, they're going to cool off as this thing pushes up just a little bit early into tomorrow. Then the VIX is going to reject and start coming down again, and the market's going to pump again. The stock market's going to pump more as the VIX comes down to maybe fill this gap, which I think is very likely. So like 16, maybe the 15s could return. And the market gets one more pump, but the VIX is going to be very, very undervalued. And once again, we have this potential bullish divergence developing. So it might form a bullish divergence. And then maybe later on, maybe after CPI, maybe later on during this week, going into next week, the VIX is going to shoot up again, fill the gap to the 20 mark and just start pushing into the 20s. Okay? And that means for the medium term, going into like mid-May, the stock market's going to come down. All right? So short term, market is likely going to cool off a little bit, then push up for one more pump. And then after that, the market's going to get a rug pull. By mid-May, it should start. That's what the VIX is starting to tell me. I'm seeing lots of signals of that developing. I'm also saying that based off where the RSI is, it's actually well above the lows like from right here and other places like that. So that tells me that it could develop a bullish divergence. It's very possible. Very, very possible. Later on, it could do that. Not right now. For Amazon, it needs to cool off a bit. Might cool off and retest 104.75. Try to bounce, and I'm seeing it's losing some volatility. MACD is weakening, so it's going to cool off. Try to bounce by the end of Monday, if not Tuesday. Push up to 106 plus, maybe 108. And then later on, the rug pull that I've been talking about for the medium term should come. Nvda is going to likely cool off a little bit, retest the 50, retest 280 or so, maybe a little lower. And then it's going to try to bounce off that and try to keep going. I say that it's very overbought right now. 76 is the RSI, it needs to cool off. Very, very healthy pullback. Nothing wrong with that before this thing continues to pump until the final top is made. Aapl, same thing I'm seeing. We have a bearish crossover on the PPO. It was very overbought. It needs to cool off. It might come all the way back down to 170. So I'm anticipating the market cooling off a bit and then trying to bounce afterwards. The final pump could come very soon. And then once again, Aapl is just going to follow the same trend I've been talking about. Cool off, get one more pump, and then finally the big rug pull is going to come by mid-May. It's not going to be a crash. I don't really think it's going to be the crash yet unless we get the catalysts. I think it's just going to be a healthy pullback by mid-May. Okay. Finally, if you want to talk about Google might try to. It needs to cool off a little bit as well. It actually has some relative strength to it. It's going to trade a little sideways, cool off to about 104 or so. Try to bounce off that, push up to 106. It could even make its way all the way up to 107 to 109. And then after the final pump on Google, we might see this thing start to downtrend by mid-May, just like the market. So I'm seeing similar trends. For the 10-year treasury yield, this thing has been very correlated with the market, which is very ironic. It tends to not do that. If it comes down to fill this gap, it might just drop with the market. So maybe the market needs to cool off a bit, and then it gets a bounce later on, and it comes back up to fill this gap as the market pumps for the final time. And then the market once again will find the top and get ready for a reversal later into May. So that's what this is telling me. Everything is suggesting something very similar. In another term, this is kind of like looking like a bull trap that's forming. There's no guarantee the top is in yet. Okay, so that's why it could pump a lot more. The bull trap is still forming, but that's what I'm basically seeing. So I just want to thank you all for listening. I also want to note that I have some merch for you guys if you're interested in buying anything, some custom merch by me, or also some hoodies that say buy low, sell high, or to the moon merch. It's all your choice. It's another option you should check out. The links excuse me, sorry guys. The links very, very close to where the comment section is. All right, guys. So thank you all for listening. Have a very, very fantastic Sunday weekend. The market to the moon as the long term is very bright, and peace out.